Hello guys, welcome back to my channel, and today I'm going to talk about Intel. As you may have noticed, Intel went down a lot, and today actually went down about 16%. So I am gonna review the stock to see if it is a good time to buy it. But as always, make sure you do your own research before you make a decision, okay? So with that being said, let's begin. Alright, let's talk about Intel. So as you can see right now, Intel is down 16%. Unbelievable. If you look at the graph, in the last 6 months, this was when the market crash happened. It recovered, but boom, it went down. Is it time to buy? Let's see what's going on with Intel. There is an article here. Intel plunges 18% after saying its next generation chips will come out 6 months later than expected. Ooh, yeah, that's a big reason why the stock is falling. Now, however, this issue is not gonna last forever. So, as a matter of fact, I think we can use this to actually take advantage and buy the stock. But before that, we're going to check some of the ratios, balance sheet, and other indicators before I make a decision if I will buy Intel. Alright, let's begin. Alright guys, as you can see, this is the chart for Intel. And this is the chart for the past 2 years. So let's take a look at some interesting points. As you can see here, on October 2018, it went as low as $42 per share. So that's the lowest it was in the last 2 years. Alright. Then recently, after the market crash due to COVID-19, the lowest it got was about 44.60 per share. And then let's look at the heights. On January 23rd, it was up to about 68 per share. And most recently, on June 5th, it was up to 64.33 per share. Alright, so the last time it was low was here on 420, and it was about 55, almost 56 per share. Okay, so right now it is at 50.59 per share. That is a big reduction, okay? So if we analyze the support and the resistance, we can see that the next level is going to be here on the around 45. So what I might do is wait and see if it goes below 45 and keeps going down. Then the next level will be here at 42. If it goes lower, then we will have to check more history, but as of right now, I am very interested because it has gone down a lot, but I will wait and see a little bit more, maybe go slower, and it depends. If I see that it starts going back up and on the 50 level, and next thing you know it's already on 52, 53, then I get in. But if it keeps going down, then I just wait until I see some recovery. But right now it is not a bad price to get in, but I guess I am a little greedy, and that's why I am gonna wait and see if it keeps going down. And once I see that recovery, then I will jump in. Alright, Pretty interesting. Alright, let's check more information about Intel. Let's go and check the ratios first, which are the fundamentals. As you can see here, it has a decent price to earnings ratio, which is only 11. It might be even lower now since the price went down. The price to sales, price book, and price cash flow, they are reasonable. Oh, really good. Look at the return on equity. Return on equity is 30.25%. That's pretty good. The dividend yield is 2.19%, which is reasonable, and the payout is 24.6%, which means they could increase the dividend if they wanted to, so they have room to grow. As you can see, the quit ratio, current ratio, debt to equity, and debt assets are reasonable. Now the debt to equity is not as good. It should be 1 or better. Then let's check the balance sheet. So if you go all the way to the total assets, as you can see here, they have been increasing. So that's a really good sign. You want a company that increase assets. That's very important. Let's check now the liabilities, which they have also been increasing, but when you compare it to the total assets, they are not that bad. So that's a good sign. And then we have the total equity here, which, as you can see, has been increasing. It went from 61 billion all the way to 77. So that's really good. I like the balance sheet so far. Let's check the income statement. As you can see, the revenue has been increasing, so this is a really good sign. The operating income has also been increasing, so that's good. And the most important part, the net income, as you can see, has also been increasing, so that's also really good. And the next thing you want to check is, of course, the earnings. And as you can see, in the past 4 years, this company has beat all earnings, including the most recent one, which is pretty good. And finally, let's see what the analysts are saying. Look, they have a 13.73% upside, average price 57.41, with a high of 82 per share, 62% upside. That's pretty good. And of course, right now they're saying hold, buy, hold, because the stock is right now going down. So eventually it's going to become a buy. Now, as you can see here, Intel offers disappointing Q3 earnings guidance as it delays next generation chips. So that's the main reason why the stock is going down right now. But if you look at the earnings, they actually beat the earnings. They were 1.23 per share adjusted versus 1.11 per share as expected by analysts. And then on the revenue, they also beat it. They got 19.73 billion versus 18.55 billion as expected by analysts. So that's pretty good. They actually beat the earnings. It was just the guidance that messed up the stock, and that's why they are going down. But if you are a long-term investor, this is a good opportunity to buy Intel. So, but remember, do your own research and analysis. Alright guys, another thing I like to do is to check the Argus report. And as you can see here, the rating right now is a buy, and the 12-month and 5-year rating is a buy according to this report. And if you look at the statistics here, they have a target price of $70 per share. Then when we look at the financials, as I mentioned, we already checked that they are increasing revenue every year, so that's really good. Financial strength is really good. So now when you compare the ratios with the industry, as you can see here, Intel is pretty much a value stock right here, and of course it has a buy rating. And if you look at the PEs, as you can see, it has more value than the sector. In the price sales area, it has more growth. Price book, also more growth. And then PEG is more value, and growth is more value, and debt capital is more value. So overall, this stock is more value than growth. Alright guys, so as you can see, Intel is a good company, has a good balance sheet, good revenue. So the main reason why the shares went down today is because when they provided guidance, they said that their microchips are going to be delayed, but I don't think that is going to be a big problem if you are a long-time investor. Now, as I mentioned, on the graph right now is on the 50s, but once it gets to like 45 or a little bit below, we're going to see if it's actually going to get supported, because that's going to be like the resistance level. However, it could recover before that, and if that's the case, I plan to buy some shares. Alright, well, as always, hit the thumbs up, ring that bell, and subscribe so you don't miss my next video. I will be talking about Apple, Microsoft, and Tesla. Very interesting stocks. Alright, hope you have a good day, and thank you.